Hi, Joshua Phillips here at Churchill Mortgage, coming to you with the latest market rate update. And today is February 23rd. I'll go ahead and mention that I have made another video that goes over these charts we're going to talk about and helps you understand how to read them. The very basic, simple explanation is the higher the mortgage-backed securities, the better the rates are, and the lower, the worse the rates are. And red is bad, green is good. Red is bad, green is good. So let's take a quick look at the chart today. And actually, this is a 30-day chart that we're looking at with mortgage-backed securities. And frankly, this week's been a little bit boring. Mortgage-backed security prices ended the week about where they did last Friday, so it really hasn't been much movement. We did have the Fed minutes where they recap what the Fed talked about. It's amazing how much content they can put out around the Fed announcement and then the Fed minutes later. And then there's, of course, all these, inflation reports we're taking a look at on a week-by-week basis. But this week was really flat. Not a lot of movement happening. If we step back, again, this is a 30-day chart. I love to look at different timelines. If we step back, let's say, to a 6-month chart, you can kind of see more of the movement where we saw rates get to their worst point last October. Again, I covered this in the additional video, which I'll include in the description. And we kind of saw rates peak back at the beginning of the year, and we've seen rates get a little bit worse this year. I'll just share one headline with you here from CNBC from a couple days ago that said mortgage demand takes a massive hit as interest rates cross back over 7%. As someone who does this for a living, yes, we have seen activity, although I think a lot of people are wanting to get pre-approved for the spring and summer purchase. But yes, it's been a little bit slower time in the marketplace. Now, I think there's always a silver lining to a slower time, higher interest rates, and that is that there's less people out there looking. And so I still believe that if you are out there looking, you're probably going to get a little better deal on a house. You're going to have less competition. So there's always a benefit, yin and yang, so to speak, to these situations. And so, you may look at a headline like that and you think that's bad, but if you're actually out there looking to buy a home, that's actually probably kind of good, because it's going to turn a lot of people off. We'll keep waiting a while longer. So, historically, 7% is not bad, but obviously that's not where we want to be. Obviously, we hope throughout this year. I really hope I'm coming to you as the year progresses with better news, mortgage rates going down. That's certainly what we hope to see. We really have no guarantees, but that's what we're looking for. So anyway, feel free to reach out about your specific situation. I'm always happy to talk one-on-one about your scenario, whether it's pre-approval, whether it's what rates are doing for you. We can also talk about discount points, buying down the rates. There's all sorts of things. We could talk about a 2-1 buy down if that's something you want to talk about. So happy to discuss any of those things with you. Hope you have a great weekend. Take care. Bye-bye.